5 reasons why Brainchip share price is up by over 200% this past month alone, and just over the past 5 sessions is up by over 50%. By now, you might have seen the BRN share price going higher and higher. It's been up some sessions 10, 20, 30% on a day. And you might be wondering, why has this been happening? What are the fundamental drivers? And what does this mean for the BRN story moving forward? Today we'll outline 5 key reasons why Brainchip's been pushing higher, but we'll also discuss and explore some of the questions that investors who are new to the Brainchip story have recently been having. We'll talk about how a company that's essentially pre-revenue has a valuation of $3 to $4 billion. We'll talk about the fact that Brainchip, a company in the technology sector that's a growthier name with long duration valuations, can continue pushing higher, while rising bond yields are a narrative that continues to be played out. It's going to be a broad video. It's been a fascinating period for longer term Brainchip holders, and it's exciting to see where things head from here. If you do enjoy this video, don't forget to hit the like button, make sure you've subscribed and turn your bell notifications on, daily videos each and every day, and drop in a comment and let us know your thoughts on everything that's been playing out for the Brainchip story. Before we dive into 5 reasons why and unpack some of these big questions surrounding Brainchip's growth opportunity, a quick refresher, Brainchip have developed their Akida technology. Akida is the world's first and currently only commercially available neuromorphic processor. It leverages spiky neural networks to facilitate AI processing at the edge. So the edge refers to processing on the device away from the centralized data centers, and you no longer need to process up in the cloud. You can facilitate AI processing at the edge. It's got a range of different benefits as well, as it is a neuromorphic computing processor. This enables ultra low power consumption. It has the ability to process on-chip learning on device, and there's a range of other benefits too. If you are interested in getting a bit more of an understanding into what Akida is and why there's so much excitement surrounding it, we'll leave links up above that you can check out after this video that we've done deep diving into the technology. And so then the first reason why Brainchip share price has been pushing higher. This one here was actually the catalyst that really started this initial run up. I know at the back end of 2021, the share price was trading in that 60 to 70 cent range. I don't think even the most bullish of investors would anticipate we'd be where we are just 2 to 3 weeks into the new year. But over this new year period, we got word that Mercedes at CES, the Consumer Electronics Show, one of the largest trade shows around the world, unveiled their new Mercedes Vision EXQX. This is one of the new leading prototypes for electric vehicles. It's a concept vehicle, but it got a lot of eyes on the story. And they unveiled that their Hey Mercedes voice recognition software would actually be implementing and utilizing Brainchip's Akida technology. This, of course, drove a lot of eyes onto the Brainchip story, but it also led on to a second benefit that really was attracted a long-term investors' attention into the story. And that, of course, had to do with the Akida technology validation. We know that Brainchip have been working hard in the research and development phase of the story for this past period. The Brainchip story has really played out over 2 decades since the initial concept for what would ultimately become Akida has come to fruition. And we know that as you move from research and development, you get the concept, you move towards silicon and ultimately commercialization. This is a transitionary period. Things work well in the lab. There's often a lot of excitement about the potential of new technologies, but it's not until you get validation for this technology, when you see leading names, leading brands actually want to use that technology, do you get that tick mark and the fact that, hey, there is actually a product market fit for what we're doing here, and there is the opportunity to scale and commercialize this more broadly. And that is really what the Mercedes news brought to Akida. It wasn't so much the fact that potentially revenue sales could flow through. That's exciting, but nobody's looking at a company like Brainchip on an individual revenue basis. They're not looking to sell X number of chips or X number of IP licensing agreements. When you're making a market like Brainchip is doing with Akida and in the neuromorphic computing space, you're looking to get wide-scale adoption, broad-based awareness. You want to make the market, you want to educate the market and potential product manufacturers about why your technology could provide them with that step change and benefit for what they're working on. And ultimately, that will lead to revenue and wide-scale commercialization down the road. And that was why there was so much excitement. We can see here on the left, Mercedes with one of their releases stated, they acknowledge that neuromorphic computing is still in the early stages, it's in the infancy, but they believe that similar systems will be available in a variety of consumer products within a few years. And when applied at scale throughout an EV, the technology has the potential to significantly reduce the energy needed to run the AI technologies that will help to control the EVs of the future. It's exciting that Brainchip's Akida will find a home in the Hey Mercedes voice recognition system. But you think about LiDAR and other factors within the EVs. You think about all the different mechanisms that could use AI processing and how Akida could help to facilitate that, and it becomes pretty interesting. Along with that as well, there was a couple of other pieces of news over this past period. ISL, or Information Systems Labs, announced that they would be joining the EAP Early Access Program. Along with that, Brainchips announced an IP licensing agreement with Megachips. Both of these, further ticks, further validation. But what was also really fascinating about it was all three of these companies, all of these names, all of these brands were not names that were previously linked with any real validation with Brainchip's Early Access Program. We know that Brainchip have got an extensive EAP program with a range of customers. A few household names that have been announced include Valeo, NASA, and Ford. But none of these three were previously announced as EAP. And so the excitement is surrounding the fact that, hang on, if each of these have come to fruition without really any indication that discussions are going on behind closed doors, it's a commercially sensitive space. Well, how many other organizations, how many of the other companies have got their hands on Akida or are interested in potentially testing Akida and embedding it within their products? That's where the excitement is. And before we do go on to the following three factors about why Brainchip share price has continued soaring higher, a quick reminder, as you know, I'm just a bloke on the internet who loves talking about stocks. I'm not a financial advisor. Nothing we talk about is financial advice. The stocks we cover are not buy recommendations. It's all just that general discussion to be a starting spot for you to do your own research from. Number 3, raising awareness globally. Now, this can play out on a range of different dimensions, but Brainchip have made an evident and concerted effort to really spread awareness about the Brainchip story, who they are, and then the Akida offering and what it could provide to product manufacturers. You only have to look at their YouTube or the podcasts that they've been releasing. There's a lot of awareness about what they're doing on that front. We've seen a concerted effort from some of the leaders of the Brainchip company to be sharing their words through interviews, through different types of podcasts with other thought leaders around, from different investor roadshows and different types of ways to spread their message more broadly. Along with that as well, Brainchip recently launched their ADRs. ADRs provide access to a broader range of capital over in the United States. It allows them to attract US institutional investors as well. Obviously, we know that the US markets often place a premium or value technology companies differently to what we're used to on the ASX. And it brings the eyes to the Akida story much more broadly. Brainchip is going heavy over in the United States as a key market as well. They've got some headquarters and facilities over in LA as well, over in California. And so they're continuing to spread the message. They're continuing to raise awareness globally. And this has a flow-on effect to number 4. And that is the fact that Brainchip has started to arrive mainstream. Now, it hasn't completely yet. It's still in the early stage. But if I just think back to when we were making videos 6, 12, 18 months ago on Brainchip, it was considered early stage. It was considered speculative. It almost was considered from some quarters as a fad, or was it really going to come to fruition? How good could the technology really be? But we have seen a definitive shift in perspective over this past period. Whether it was the Mercedes Vision EXQX news and some of these leading publications discussing Mercedes vehicle and the Akida technology embedded within. Whether it was other leading publications such as the AFR providing articles about Brainchip stating that it was a tech stock to watch in 2022 that catalyzed a lot more excitement in the Brainchip share price. Whether it was the fact that Brainchip earlier in 2021 was included into the ASX 300 and after this recent run up is currently of the stature and market cap now that if the rebalance was done around now, they would potentially be included into the ASX 200. All of this brings further validation to the mission, but what it also does, as well as the other investor roadshows that are likely going on behind closed doors, it brings eyes and potential institutional investment, or at least awareness, onto the story. Of course, in the earlier stages, there's a lot of retail investor hype and excitement behind the story, but as the technology becomes validated, as the story becomes real and it arrives, institutional investors start to pay attention to it. They have the larger volume, they have the ability to really take positions and bring stability to the register. And I believe that's what we're starting to see over this current period of time, as BRN arrives in the mainstream. And then on to number 5, valuation. Brainchip and many other companies in the space at this similar stage of their life cycle often have questions about their valuation. Oh, it's pre-revenue. It doesn't actually have any sales yet. There's no commercial agreements. How can a company be valued at 1 billion market cap or now $3 or $4 billion market cap? And I think for that, we need to just have a bit of a rational discussion about this. Now, let's just paint a bit of a picture. Let's have a think about it. Imagine you're at the Formula One, Melbourne Grand Prix, First race of the season. Everyone's excited. It's the first race of the year. Everybody's been sitting there. Qualification's done. The racers have just got to the front of the grid. Everybody's quiet. There's a hush going out across the system. And imagine somebody just stood up there and said, I don't even know why everyone's here. These racers, there's no chance they would be able to compete with world championship powerlifters. None of them would be able to bench press a world-class effort. Most people would just be sitting there and being like, hold on, we're pretty aware of that. That's not what they're here to do. They're racers. They're racing their motor vehicles. Or imagine, let's just cast our mind. Imagine the FIFA World Cup it's here and now. We've got the FIFA World Cup final upcoming for the next year in 2022. Touch wood, maybe it's Australia in the World Cup final. You've got your friends, your family, the guys and girls have all come around. Everybody's there, ready to watch the final. And imagine just before the final start, the referee's got the whistle there in his mouth, ready to blow. Everyone's quiet. And imagine somebody stood up, one of your friends was like, why are we even watching this? None of the players on the field would be able to do a good backstroke. Michael Phelps would absolutely smash them in the pool. Everyone would be like, what are you talking about? That's not what we're here. We all know that these are not swimmers or powerlifters. They're Formula One drivers or they're football players. And that's kind of like what the discussion surrounding valuation and Brainchip being pre-revenue is. I would dare say, and I can't speak for every Brainchip investor, but I would dare say that most of the longer term investors who have done their due diligence and research into Brainchip, at one time or another, have come up to the fact that Brainchip is pre-commercial and isn't selling its products yet. It's pre-revenue. But the same way that not every company who's finished their exploration and is developing a resource product, a resource project, maybe they're developing a lithium mine or a graphite mine or an iron ore mine or a gold mine. Those companies don't have a $0 market cap valuation until they bring production online. The same way that a biotechnology company, while they're developing their product from the lab into phase 1s, into phase 2s, awaiting FDA approval, you don't have a $0 market cap right until you sell your first product. There is development through that process. ASX investors understand the resource space very, very well. The biotech space as well. You look at a company like Imugene, they've soared based on their technology. You don't have to be selling a product because there is an inherent value attributed to having IP surrounding your biotech product or surrounding your resource. It's just people are more familiar with valuing resources or valuing the IP surrounding biotechnology products. But suddenly it's technology and people think, oh, we haven't seen technology growth names previously have a value attributed to them before they were selling products, so something must be wrong. But that's just not the reality. If you look to the US market on a comparable basis, there are companies out there running CNN networks in a very product narrow space, and we know that Brainchip is product agnostic. We know that Akida has the ability to go across sectors, across products. There are companies out there with $5 billion plus US dollar valuations. So it's not as if these companies do not have valuations attributed to them. We just haven't previously seen it on the ASX. That doesn't mean that it's wrong. It just means that it's different. And so we should take time to understand and discuss and have constructive discussions surrounding the technology, the opportunity, the scale, the space, rather than just saying pre-revenue, no value attributable yet. This is a company that's playing on the frontier of next generation technology, and there is inherent value to the IP. Now, what everybody attributes to that value is going to be different. I will attribute a different value to you, to someone else who watches this video. And that's what makes a market. That's what's really interesting about it. And so then I guess the question that many investors have is what happens from here in terms of the share price? As we can see here from the early news in January, we saw a gap up above. And once it started moving away from that 70 to 80 cent mark, it really did start moving. Most recently, we saw a gap up above that $2 mark. It's really fascinating. It's been a significant period of strength. The share price the market cap is above the $3 billion mark level now. And many investors are wondering, where do we head from here? For me personally, I wouldn't be surprised if we saw a pullback or even a retracement back to lower levels. There are still gaps on the chart that need to be filled on the daily close. Of course, we've seen them within the intraday. It's traced back to those levels. I think the most important one that many investors will remember over this past period was that 150 level. I don't know where we'll end up, and I'm not foolish enough to try to predict it. I think over this past period, we've seen that the market really has turned the charts upside down, and any type of conventional TA has been thrown out the window for this short-term period. The question, of course, will be, is this institutional investment really starting to take positions and its heavy volume coming through? Is this driven predominantly by retail investor excitement and hype and starting to flow through? Is this overseas buyers who are starting to become aware of the opportunity for Brainchip? And we're seeing obviously on lower volumes, but the US markets and the European listings go up in the overnight sessions as well. I'm really not sure, and I think obviously the answer lies at a cross-section of those three different types of groups or players on the market. Who knows where we end up? But I think it's important to remember that short-term price movements are not an indication and never invalidate the longer-term opportunity. Brainchip could end up at $1 tomorrow, or it could end up at $3, and I don't think that that would speak to, nor really provide much of an indication about where it will be in 2025 or 2030. We've talked about it before. Brainchip, of course, is much more inherently speculative and inherently volatile than your blue chip companies. Much of the journey up ahead now relies on ability to execute and deliver. But what they do have is they have their hands on the world's first and currently only commercially available neuromorphic processor, first in class, best in class. They've got a world-class team. Many of them have done this before at various leading companies in the semiconductor space around the world. And so they do look well positioned to really continue to scale into a TAM that has been discussed at $60 billion market size, but that will continue to grow as the digital adoption picks up pace. In terms of the near-term valuation, everybody's going to have a different interpretation of that. There's going to be buyers, there's going to be sellers. I think it's pretty evident to know that there's going to be sentiment-driven moves both to the north side and the south side in the short term. There's obviously a lot of exuberance and hype coming into the share price, and so it'll be fascinating to see what happens. For the longer-term investors, I don't think too much is really going to change. Many will remember that September 2020 period just a couple of years ago. It's not too dissimilar to what happened back there. We'll see where the dust ends up settling. But I think for those longer term investors, really this past period of news flow, excitement and press releases has only validated the long term opportunity that Akida's feeding into. And I just wanted to spend a little bit of time discussing this rising bond yields narrative. We know, of course, that the standard narrative that's been wheeled out and is discussed is that rising bond yields is going to be a net negative for technology names, particularly those in the growthier end of the market. The longer duration your valuations, of course, rising bond yields means there's going to be a rising discount rate used for your discounted cash flow analysis. As discount rates rise, then when you're bringing back future value, future cash flows into the present day, then your present day cash flows are going to be worth less. So companies that have got longer duration valuations are going to suffer more, and we're seeing valuation compression across this growthier end of the market. We've seen that playing out time and time again. But of course, the discussion surrounds not only valuation multiples that the market's willing to pay for companies in this sector, but there are a couple of other fundamental reasons that rising bond yields or rising interest rates is seen as negative or bearish for the broader growthier sector of the market. Of course, if you're not cash flow positive, if you're not profitable in this stage yet, many of these companies are going to need cash to continue to grow. You need to fund your growth somehow, and if you're not churning out cash flow, then eventually you'll likely have to revisit the market in one form or another, whether it's by raising capital on the equity side or whether it's through debt as well. Obviously, if you're raising money through debt and you're borrowing, as interest rates rise, your cost of borrowing or your cost of capital is going to increase as a result of that, which is ultimately going to be a negative for profitability. But I do think it's worth taking a step back and thinking rationally about some of these narratives, because not all technology is made equal. And of course, not all companies in the growthier sector of the market or the growthier space of the market are made equal. Your mega cap technology names that are cash generative companies with very strong balance sheets and act almost defensively at this stage of the market are very different to your earlier stage companies that need cash to grow. They have huge marketing efforts and they need to continue to raise money to grow and continue to build their snowball like that. Going to once again be very different again to a company like Brainchip. Now, why do we say that? So Brainchip, first and foremost, when we are discussing the need to raise capital, they've got their facility with LDA Capital. This is secured. They don't need to continue to revisit the market. This reduces the need or the risk of a capital raise because they've got this facility locked up. On the other side as well, if you think about the traditional trajectory of the semiconductor space, it is very different to many of these technology names that you might be familiar with. The semiconductor space has a huge front-loaded investment, and you will see significant costs in the earlier stage. This is not atypical. We've been talking about this on the channel for a while, but I think when people look at the semiconductor space, they're like, wow, why are the costs so high? They're not profitable yet. They're looking at the costs. They extrapolate that out over 5 years. If these costs stay the same or they rise, well, you're in strife. That's not how the semiconductor space works. What it is, and it's a very, very interesting space, is you have a huge early upfront, front-loaded investment. Research and development takes time, it takes capital. It's not an easy thing to do. It's a very complex and intricate space. But once you've done that, you've got a technology like a Brainchip have with their Akida 1000. Then, and particularly if you're going through the IP licensing route, like Brainchip is doing, well then your cost of delivery is very, very, very low. You're paying essentially no marketing. You don't need to go out. It's not a consumer-facing product. All you need to do is pay for your sales and marketing team, and they need to be speaking to, of course, the product manufacturers, and they're paying an IP licensing agreement at scale if they're paying for a large scale agreement. And your cost of delivery is very, very low. You don't need to pay for cost of goods for the development of chips. Of course, that's their side of the deal. They're doing the marketing of the products themselves. They are actually the producer, manufacturer, the marketer, and your sales force. All Brainchip needs to do in this space is pay for the sales and marketing team, and their product manufacturers, their customers, their clients will do the rest. The cost of delivery is very, very low, and it's why you can see gross margins in the space 70, 80, 90%. Once you get to cash generative stage, it is a significantly cash generative sector of the market. But I think a lot of people just look at the early costs, they extrapolate those out and say, oh, you must have to continue to spend moving forward. That's not how it is. It's front loaded. From then on, cost of delivery is very, very low, and the ability to scale rapidly, snowball, and see the hockey sticking of revenue, if successfully executing and delivering, is there. And that's why I think a company like Brainchip will be more immune than some of these other companies in the technology sector to rising bond yields. Now, will they be completely immune? No, of course not. It's foolish to think that. But I do think that not all technology, not all growth names are made the same, and there are some inherent factors surrounding the Brainchip offering and other companies in the semiconductor space, which positions them in a better space than some of the other names in the sector. And so, of course, we sit here now with Brainchip above the $2 share price, with the market cap above the $3 billion market cap level, in the early stage of 2022, and the opportunity for further commercial agreements to come to market, with a lot of excitement about the bus journey up ahead. Who knows where we head? We've heard previously from the Vice President, Rob Towson, who stated that this is just the tip of the iceberg. There's plenty more to be unveiled, and I think a lot of investors are now starting to really sit up, pay attention, and respect what Brainchip have been developing with their Akida. This is no longer just inherently speculative or just a fad or excitement. There is a real and currently the only commercially available solution in the space for a space that is going to grow and grow exponentially for years to come as far as the eye can see. I'm excited. I can't wait to see what's up ahead. If you enjoyed the video, don't forget to hit the like button. Feel free to share it out as well. Keen to hear your thoughts, so drop in a comment on it all and make sure you've subscribed and turn your bell notifications on. Thank you so much for joining us. A big congratulations to the long-term holders for Brainchip. It's been a long journey. As the quote goes, it takes a long time to become an overnight success, but congratulations to the Brainchip team and everybody who's been involved in the journey, because it truly does look like the fruits of the labor are starting to shine through. Excited to see where it all heads. Thanks for joining us. Akida Ballista, and for now, stay well and happy investing.